What's going on, guys? Welcome back to another video. In this video, I've got another incredibly important AMC update to bring all of you this evening. So what we're going to be covering in this video is a couple of the key new pieces of data, some really important data points that we definitely need to take a look at. And there are some key discrepancies within how this data should be reflected in some other key pieces of data. I know that sounds kind of confusing, but it's going to make a lot of sense once we go over it. And it does tell us a lot about the situation that we are in. Now, we also have some expansion to do on my previous video. As you guys will see, Citadel has gotten extremely arrogant over the past couple of years. They think they are too big to fail, and what they are doing to our financial system at the current time is absolutely horrendous. And we are going to go over exactly what their role is in this reverse repo situation and how we are about to expose them. So we have a lot to cover in this video. And before we get into all of that, if you guys would like to earn 2 free stocks with Webull valued up to $1,850, make sure you check out that link down below in my description. And if you guys don't mind, make sure you leave a like on this video. It costs you nothing to do it, but it really helps me get this information out to as many people as possible. And the more people we get learning about AMC, the more people join our movement, which only benefits us in the end. So right now, at the current time that I am recording, we are seeing AMC trade at $14.63. If we are able to break above this $14.50 mark with strong volume and stay there, things are about to get incredibly interesting. Now, when we move over to some of this data from iBorrowdesk, this is going to tell us a very interesting story. So this is going to reflect the amount of shares that are available to be shorted that iBorrowdesk is getting from the different brokers that they represent. Now, we saw recently this number go all the way into this 3.2 million share range, and the cost to borrow at this range was about 7%. Now, coming back to the current range, there are only about 6,000 available shares to be shorted, but the short borrow fee rate is not adjusting. I find this very interesting because the last time we saw the available shares get down to levels like this, the cost to borrow and the short borrow fee rate that we are seeing on this left side right here got all the way up into the 90% range. Now, when we think about this, if there are less shares available to actually be borrowed in order to be shorted, we would expect to see the short interest spike as well. And that is not what we are seeing. When we come back over to this update from Ortex, we can see that the short interest as a percentage of the free float is at about 14.55%. Now, there's a couple of explanations for this. Odds are there is a lag between when Ortex is getting all of this short interest data versus the actual data that we are seeing right here on iBorrowdesk for the amount of shares available to be shorted. Now, I do think that the short interest that we are seeing on Ortex is obviously way understated. The reason for this, we've all been over this before. The hedge funds and the different institutions, it's in their best interest to come out and lie to the different regulatory institutions saying that their short interest, the amount of shares that they have sold short, is a lot lower than they actually are, to make it look like the short interest in general is lower, creating some retail fear and maybe spread some FUD in order to think and make people think that this squeeze will not happen, but that is just not the case. Now, let's get into Citadel's role in all of this reverse repo and repo situation that is going on with the Fed at the current time. When we come over to this Reddit post, shout out to Peruvian Bull over here for putting out this due diligence yesterday. This is unbelievable if you guys want to take a look at it, but there's some key sections that I want you guys to understand. Then it clicked. Remember Austin Tobit's godlike DD, the everything short? I am drawn to a specific paragraph from step 4. So the Fed is printing free money, the repo market is lending free money, and there's basically no difference between the collateral that's being lent and the cash that's being received. With all this free money going around, it's no wonder why the price of the 10-year treasury has been declining. In fact, hedge funds are so confident that the 10-year treasury will continue to decline that they've shorted the entire 10-year bond market. I'm not talking about speculative shorting. I mean shorting it to oblivion like they've shorted stocks. Don't believe me? Hedge funds like Citadel advisors must first locate the treasury bond in order to swap them for cash in the repo market. It's extremely difficult to do this with the Fed because they're tied up in government BS, so they locate a lender in the market. These consist of other commercial banks and hedge funds. So financial institutions keep treasuries on reserve for hedges like Citadel to short. Citadel comes along and asks for the bond. They throw it into Palafox Trading and collect their cash. So what happens when they need to pay for their repo agreement? Surely to God, there are enough bonds floating around around, right? Not unless hedge funds like Citadel have shorted more bonds than are actually available. Guess what? 90% of the bonds used in reverse repos have a maturity over 1 year per this graph from an SEC research paper. Now, here is what I found earlier about Citadel and Palafox and this whole reverse repo situation. Now, when we come over to this SEC document from 2014, reverse repurchase and repurchase agreements are short-term in nature and are recorded at the amounts of cash paid or received plus accrued interest on the statement of financial condition. Reverse repurchase agreements, which are actually initiated to obtain collateral securities to be delivered to counterparties of known or planned short sales or repurchase agreements, are not considered to be investment positions. Reverse repurchase agreements and repurchase agreements with the same counterparty are reported on a net basis where there exists a legally enforceable right to set off the recognized amounts and when certain other criteria are met in accordance with applicable accounting guidance and on offsetting. So this is essentially telling us that they are shorting within this repo market. Now, when we come back over here, I want to take a look at a couple of other things. So Citadel shorts the entire 10-year bond market, and now most of the securities being used as collateral are of similar maturity. Very strange. So the hedgies have shorted a blank ton of treasury bonds, borrowing these securities from their partners, the prime brokers and banks, but now the SLR exemption has expired. Previously, the banks were allowed to go down to 0% capital reserve ratio, but now they have to keep the same assets on hand to remain solvent at all times. Just see this letter down here. Now, when we come down a little bit further, also something that I would like to get into before we continue throughout this Reddit post, shorting the treasury market, to me, doesn't make a lot of sense because when we take a look at the 10-year yield, which is, it seems like that's what these different institutions are going after, we can see that the yield of these types of bonds has been steadily decreasing over the last 40 years. Now, when yields of a bond or an interest rate of a bond decreases, the price of the bond actually increases. That is just basic fixed income security jargon there. So what it looks like they're actually doing is they're short the interest rate of the bond. I'm not exactly sure how they are doing this, but it's very interesting that they are able to enter into these types of trades and manipulate the treasury security market. Now, coming back over here, this is where it's going to all get wrapped up together. Liquidity is being sucked out of the system at an unprecedented rate. This can't continue forever. Something is going to break. Now, there's a wide variety of things that could happen in order for this system to actually collapse, and it looks like it's very fragile at the current time. One of these things, obviously, is going to be these short squeeze situations that are ahead of us. We have the AMC short squeeze pretty much getting ready to take off. We have a lot of these different regulations and these different proposed rule changes coming into play that are actually helping retail investors. But honestly, any over-leveraged position that these hedge funds have that goes against them could be the straw that breaks the camel's back in order to set off a chain reaction in our financial system that is going to be absolutely brutal. Now, when we come back over to the chart of AMC, again, at the current time that I'm recording, we are seeing AMC very close to this $14.70 mark. This is a very key level for the stock. We have seen it go into the $15 range in the after hours trading period. But typically in the after hours or in the pre-market trading periods, we do see a lot lower amount of volume. So it's very hard to sustain the price levels that we reach in these after hours trading periods unless we get a lot of volume and support at some key levels. So going into tomorrow, it's going to be very interesting. We have a very volatile week ahead, and that is going to conclude this update on AMC. So if you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people as possible. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys are having a great day, and I'll see you guys in the next video.